Many people spend their lives working long hours, taking on extra shifts, and pushing themselves to the limit in the hope that sheer effort will lead to financial security. But if you've ever felt that despite all that hard work, real wealth seems out of reach, you're not alone. The truth is, building lasting wealth isn't primarily about how hard you work with your hands or how many hours you put in. It's about how wisely you work with your mind. Warren Buffett, one of the most successful investors of all time, has often emphasized that intelligence in decision-making, combined with patience and discipline, far outweighs endless toil. He didn't build his fortune through grueling physical labor or endless hustle. He did it by making thoughtful choices about where to put money to work for him over time. Today, let's explore this idea calmly and practically, how using your brain strategically can create opportunities for wealth that hard work alone often cannot. Think about it for a moment. Have you ever noticed someone who seems to work tirelessly but still struggles financially, while another person makes calm, deliberate moves and sees their resources grow steadily? It's not about luck or genius-level IQ. Buffett himself has said you don't need extraordinary intelligence to succeed in investing. What matters is applying reasonable thinking consistently to financial decisions. At its core, wealth building relies on understanding a few key principles that allow money to grow on its own. One that Buffett has highlighted is the power of compounding, where your earnings generate more earnings over time. It's like planting a tree. You put in effort at the beginning to choose the right spot and care for it, but then nature does most of the work as it grows year after year. Hard work is important. It's how most of us earn our income in the first place. But without directing that income intelligently, it can slip away just as quickly as it comes in. Many people trade their time directly for money, hour after hour. That's reliable, but it has limits. Your body and energy are finite. Smart financial thinking, on the other hand, creates ways for money to multiply without requiring constant effort from you. Consider everyday examples that anyone can relate to. Someone might work overtime to earn more, only to spend it all on immediate needs or wants. Another person earns the same, but sets aside a small portion regularly into something that grows quietly in the background, like a broad market index fund. Over years, that small habit can turn into something substantial, not because of intense labor, but because of consistent, thoughtful allocation. This is where the brain comes in, deciding to live below your means, even when it's tempting to spend everything you earn. It's choosing to learn about basic financial tools that are available to everyone, regardless of where you live. Things like automatic savings transfers that move a percentage of your income, say 10 to 20%, into a separate account before you even see it. Or exploring side income streams that don't require trading more hours, such as freelancing online in skills you already have, renting out unused space if you have it, or creating digital products once and selling them repeatedly. These aren't complicated ideas, but they require pausing to think rather than reacting impulsively. Buffett has spent decades reading, learning, and making decisions based on understanding businesses and how value grows over time. He looks for quality opportunities where money can work efficiently, not ones that demand constant attention. Let's pause here for a gentle reflection. When was the last time you set aside a quiet moment to review where your money is going? Not out of stress, but out of curiosity about how small changes in thinking could lead to bigger outcomes down the road. Moving forward, one of the most powerful tools for wealth is investing in things you understand at prices that make sense. Buffett talks about buying pieces of strong businesses through the stock market, particularly broad index funds that track the overall economy. These aren't risky bets, they're ways to own a slice of many companies that produce goods and services people need every day. Over long periods, economies tend to grow, and patient participants benefit. You don't need to predict the future or time the market perfectly. In fact, trying to do so often leads to mistakes. Instead, regular contributions, even modest ones, into low-cost, diversified options allow time to do the heavy lifting. A portion saved today can grow significantly because of compounding, earnings building on previous earnings. Imagine starting with a small amount and adding to it consistently. At first, progress feels slow, almost invisible, but after several years, the growth accelerates. This isn't hype, it's mathematics at work. Many people overlook it because it requires patience, but that's precisely why it rewards those who think ahead. Another aspect of using your brain wisely is avoiding common pitfalls that erode wealth. High-interest debt, for instance, works against you in the same way compounding works for you. Paying it down frees up resources to build positively. Impulsive spending on things that depreciate quickly drains potential. Thoughtful choices, buying quality when needed but not excess, preserve capital for better uses. Buffett has often said the stock market transfers money from the impatient to the patient. Those who chase quick gains or panic during downturns miss out, while those who stay steady benefit. Downturns can actually be opportunities to acquire more at better values if you have reserves built through prior smart habits. Building an emergency fund is a prime example of intelligent preparation. Aim for enough to cover several months of living expenses in a safe place. This isn't about hoarding, it's about peace of mind, so you're not forced into poor decisions during tough times. Side income is another area where thinking creatively pays off. In today's world, opportunities abound that weren't available before. Freelancing skills like writing, design, or teaching online can generate earnings from anywhere. Creating content or products digitally means effort up front can yield ongoing returns. Renting assets you already own, like a room or equipment, turns idle resources into productive ones. These aren't get-rich-quick schemes. They require learning and effort initially, but they leverage your mind more than endless hours. As we think about all this, consider your own habits. Do you spend more time planning your weekends than your finances? What if shifting some of that mental energy toward understanding money basics could change your trajectory? Education plays a huge role here. Buffett reads extensively, not just about investing, but about businesses and the world. You don't need formal degrees. Free resources online teach fundamentals. Books on value investing, personal finance, and economic principles are accessible to anyone with curiosity. Start simple. Learn how index funds work, why diversification matters, how to budget effectively. Knowledge compounds, too. The more you understand, the better decisions you make, leading to better outcomes.
Protecting what you build is equally important. Insurance for health, property, or liability prevents setbacks. Avoiding speculation on things you don't understand keeps capital intact. Over time, these thoughtful steps create momentum. Wealth isn't about massive income necessarily. Many wealthy people started modestly but directed earnings wisely. Reflect again. If you could make one small change today, like setting up an automatic transfer or reading one educational article a week, what might that lead to in 10 years? Patience ties everything together. Wealth building is a long game. Short-term fluctuations are normal. Focusing on them distracts from the bigger picture. Economies recover, good decisions compound.
Buffett's approach has worked across decades through booms and busts. It's timeless because it's rooted in human behavior and basic math, not trends. Diversification spreads risk. Don't put everything in one place. A mix of savings, investments, and perhaps income streams provides balance. Reinvesting earnings accelerates growth. Instead of withdrawing gains, let them build. Mindset matters deeply. View money as a tool, not an end. Focus on freedom it can provide, time with family, pursuing interests, helping others. Many chase status symbols early, delaying wealth. Delaying gratification, choosing experiences over things when possible, aligns with intelligent growth. Community and advice help too. Discussing ideas with trusted people or learning from others' experiences sharpens thinking. In conclusion, building wealth with your brain means making deliberate, informed choices that set money in motion to grow independently. It combines saving consistently, investing patiently in understandable opportunities, avoiding destructive habits, and continually learning. This path isn't flashy or fast, but it's reliable and available to anyone willing to think calmly about their future. Start where you are with what you have. Small, smart steps today can lead to meaningful security tomorrow. If this resonates with you, like the video to support more content like this, subscribe for thoughtful discussions on mindset and personal growth, and share your thoughts in the comments. What's one intelligent money habit you're focusing on? I'd love to hear from you. Take care and remember, thoughtful decisions today shape a stronger tomorrow.